The markets continued their slow, steady uptrend with evidence that the bulls are still in control because we're still trading above the T line. And the uptrend, as you can see, is fairly slow and consistent without any great exuberance coming into the market yet. That exuberance will be illustrated by big candle days and or gap ups in the overbought condition. Right now, the markets continue to demonstrate they're just slow, steady, uh, bullish sentiment trends. Also illustrated by the NASDAQ. Notice how it's just slow and steady. So the longer this stays above the T line, the more investor sentiment will start building up. That's where you start watching for exuberance. And when that happens, that's the process for telling you that it's time to start taking profits. Crude oil prices have dropped. You can see the nature of this uptrend changed when they closed below the T line. That tells you they're now likely to head for another support level. However, you're getting into the oversold area. Watch for a J-hook pattern. The fry pan bottom has been a very strong price pattern in these market conditions because it allows for time for the investor buildup to form the pattern. Our recommendation on Rubicon, RUBI, was based upon the fact that they came back down, hit the 50, and you could see the slow curve coming back up above the T line. Also making the prospect that if this is a fry pan bottom ready for a breakout, the next price move could be back up into the trajectory of the existing trend. SE was recommended, CE Limited, based upon this fry pan bottom. Notice how this uptrend started with a Morningstar signal. We're right at the breakout level. If this opens positive tomorrow, giving you a doji sandwich, that would tell us that this candle right here and then this candle right here on a positive open would definitely be breaking out, also taking you up into the next trend trajectory. And AXSM, another fry pan bottom recommendation. Also, look at the doji sandwich right here at the breakout level. If we know what we should expect coming out of a fry pan bottom is a strong price move, and we also know that coming out of a doji sandwich, the probabilities of more upside, that just adds confirmation that this level right here is not going to act as resistance anymore, that your next wave to the upside, which could be the same magnitude, is now in progress. When the markets are in a consistent mode and you don't have to worry too much about a big sell-off, that allows candlestick patterns like a belt hold, as we saw in OIS, telling us that this uptrend coming out of this little slow curve is in progress. Remember, when they do a belt hold, opening way down here, then coming back up into the trading range, they've wiped out a lot of sellers and the bulls are still in control. That same scenario was applied to our recommendation on ADVM. Big belt hold signal, kind of a double bottom, putting us in a situation where we know that a lot of the sellers are out of the way, so any buying is not going to run into as much selling resistance. These simple analysis of candlestick signals and patterns are based upon hundreds of years of investor sentiment working the same way time after time, putting us in situations where we know the probabilities are dramatically in our favor that we're going to be in an uptrend or a downtrend. That'll be it. We'll see you in the chat rooms.